a sense of what's driving the rally in the Chinese market? Is it a case of improving eco data? Is it a case of China, handling the virus well? Or is this a case of short covering?
Hey, good morning. Yeah, thanks for having me. So in regards to the huge rally we've seen in Chinese equities over the last couple of days, I think there's a few factors at work here. First of all, the sell-off in the bond market driving investors into equities. The second thing around liquidity, I mean, this is a liquidity-driven bull market globally, so it's not really much different in China. Also, in regards to the institutional investors that we speak to here, we have seen at least 2 years of underweighting in terms of Chinese equities. And so with the economic picture valuations slightly more attractive in Chinese equities, we're seeing foreign investors move into Chinese equities. And I think that's something that will probably continue into the second half of the year.
Is the rally in China different from that in the U.S., where we're seeing exuberance despite rising virus cases?
Well, I think it is slightly different. I mean, in terms of the U.S. rally, I mean, this has been a consensus trade for the last 10 years. The growth projections in China, although have come down quite significantly this year, the velocity of the rebound does look like it's going to be quite strong. And so I do think that investors will continue to look at China, maybe not so much after this recent rally, but I think into the second half of the year and into next year as well. I think Chinese equities do offer a good diversification angle for institutional investors and also for those looking for some alpha.
And so how can investors build on that exposure to Chinese equities, Thomas? I mean, where do you see funds going right now? Where are flows? Is it more towards the large caps? Is it here in Hong Kong?
We have had a preference for onshore iShares for quite some time now, for a couple of reasons. One, for the diversification angle that I mentioned. Another around the inclusion of iShares into global indexes. I mean, we're not really having that this year, but certainly last year. And I think institutional investors, at least offshore, are still quite simplistic in the way that they look at Chinese equities, basically looking at either onshore versus offshore. And I think now that valuations have come down offshore, and we are going to have quite a slew of IPOs in Hong Kong, I think investors are going to start looking to onshore China again also.
That MSCI deal that we saw here with Hong Kong exchanges winning that index licensing deal, is that going to improve fund flows into Hong Kong? How do you see it, Thomas?
Well, it's certainly positive, and it's something that we've been looking at for a couple of years now, and it has been one of the hurdles for foreign investors going into onshore Chinese equities and not having the ability to actually hedge their positions. So I think this is definitely a tailwind for Chinese equities. And I think, institutional investors globally in the third quarter of this year will rotate into Asia, and obviously China is a big part of that.
Thomas, we heard from Hong Kong Chief Executive Carrie Lam saying that the markets have reacted favorably, reacted well to the security law. And we also saw how the Hang Seng gave up its gains for the day on the back of comments she made today. What's your view on how the market's reacting or responding to the security law?
I think, what we're seeing in Hong Kong is similar to what we're seeing globally. I mean, investors are looking through short-term data to what's expected in 2021. And in terms of the actual GDP growth, earnings growth that we're expecting in 2021, it is much stronger in Asia and in China also. And I do expect that in the short term, we'll see some tactical rotation into Europe. In a longer term, we'll continue to see investors buy Chinese equities, whether that's onshore or offshore.